Your roadmap to the latest in auto. Welcome to Highway Herald. Back in April, Trump unveiled a historic $350 billion trade deal with South Korea, tied to U.S. tariff cuts. It was hailed as a game changer, but now it's unraveling fast. Seoul is pushing back, invoking fears of a repeat of the 1997 Asian financial crisis. The backlash? Not from rivals, but allies. This isn't just about trade, it's about trust, survival, and power. So what went wrong? Let's break it down. From dealmaker's grip to Seoul's growing recoil. The July handshake between Trump and South Korean President Lee Jae-myung promised a landmark deal, reduced U.S. tariffs in exchange for a $350 billion Korean investment in American infrastructure and EV production. Trump touted it as proof his trade tactics worked, but Seoul quickly backpedaled, clarifying the funds would be long-term investments, not upfront cash. Trump's portrayal sparked panic, with economists warning the demand would drain 84% of Korea's reserves. Unlike Japan, which pledged a similar amount with stronger currency backing, Korea lacks financial buffers. More than economics, the 1997 Asian financial crisis still haunts Seoul, making leaders wary of repeating past mistakes. What started as a win-win now feels like a diplomatic trap. Korean markets are rattled, media outrage is growing, and Seoul feels more like a bargaining chip than a true ally. The deal, once hailed as historic, is now mired in mistrust, market volatility, and fears of national vulnerability. But South Korea's caution wasn't just about the money, it was about the missing safety net behind the numbers. Swap line or bust, Seoul's red line. South Korea's top demand in the $350 billion deal with the U.S. is a Federal Reserve currency swap line. Without it, funneling such funds into America could crash the won, already sliding past 1,400 per dollar. With a swap, Seoul could safely convert its currency to dollars, stabilizing markets and avoiding panic. President Lee has warned the deal is impossible without this safeguard, invoking memories of 1997 when reserves evaporated, the won plummeted, and IMF austerity devastated the nation. Yet Washington hesitates. Treasury Secretary Scott Bessent offers sympathy but no promises, while Commerce Secretary Howard Lutnick dismissively suggests Korea follow Japan's example. But Korea isn't Japan. The yen dominates global trade at 17% versus the won's 2%, and Seoul's reserves are far thinner. Without a swap, the Fed might push Korea toward its limited FEMA repo facility, which won't prevent speculation or capital flight. In global finance, perception drives reality. Even the appearance of vulnerability could trigger the crisis Seoul fears. And while financial panic brews abroad, domestic pressure in Seoul is reaching a boiling point. Before we delve deeper, take a second to hit that subscribe button and join the Highway Herald community. Your support helps us keep delivering high-octane stories where cars meet commerce and policy meets the pavement. Now let's get back on track. Fuel to the fire, domestic politics, and Hyundai's Georgia meltdown. President Lee faces mounting domestic pressure as South Koreans view the U.S. trade deal not as negotiation, but as coercion. Opposition leaders warn that any agreement lacking financial safeguards could lead to impeachment, while the public denounces it as economic surrender. Tensions exploded after a U.S. immigration raid in Georgia detained over 300 Hyundai battery plant workers, many of them South Korean nationals. The incident, widely broadcast in Korea, fueled outrage and reinforced fears of unequal treatment despite massive Korean investment in the U.S. Even Trump's apology failed to repair the damage. His repeated claims of $350 billion up front only add to the mistrust. Koreans know the numbers and the risks. Already contributing heavily to U.S. defense, South Koreans now question why they should fund America's economic ambitions at their own peril. Economists argue Trump's demands defy logic, risking financial instability. But this isn't just a national concern. The shockwaves are rippling across the Indo-Pacific's geopolitical chessboard. Indo-Pacific chessboard. Economics meets deterrence. The U.S.-South Korea trade clash is unfolding within a larger geopolitical storm across the Indo-Pacific. As Washington demands a $350 billion investment, Seoul is simultaneously navigating growing pressure from a China-Russia-North Korea alliance, symbolized by the recent Beijing parade where Kim Jong-un, Putin, and Xi Jinping stood united. In this tense climate, economic stability is vital to South Korea's national security. A financially weakened Seoul would lose leverage over Pyongyang and risk being pulled deeper into Beijing's orbit. Trump's approach, tying military alliances to trade deals, has complicated this further. Though the defense pact remains strong, Seoul's leadership and public now insist that security and economics be treated separately. President Lee has drawn a firm line. Defense cooperation is non-negotiable, but trade must follow logic, not politics. Should the deal collapse, South Korean automakers and battery suppliers would face steep tariffs, falling behind competitors from Japan and Europe. And as pressure mounts politically and diplomatically, the markets themselves are beginning to sound the alarm. Markets react, and the fuse is lit. Financial pressure on South Korea is mounting fast. When the won broke 1,400 per dollar, markets saw it as a red flag, not just a number. Without a U.S. currency swap line, analysts warn the won could drop another 50 points annually, hitting 1,450, a flashback to the 1997 crisis. Korean firms reliant on dollar loans and imports would feel the pain first. Wall Street is equally alarmed by Trump's proposed profit-sharing model, 50-50 until Korea recovers its investment, then 90% to the U.S., a structure experts call commercially irrational. Economist Herald even suggests tariffs may be less damaging than agreeing to such lopsided terms. President Lee has proposed alternatives like phased equity and structured loans, but Washington remains firm. The APEC summit in Seoul next month may decide the deal's fate. If talks fail, tariffs stay, and Korean automakers like Hyundai and Kia could suffer major setbacks. So, how does this all add up in the final analysis? Verdict: a deal too costly to seal? The $350 billion deal, once touted as a triumph of Trump's negotiating style, has spiraled into a standoff that could reshape global trade dynamics. What began as a historic win now reads like a cautionary tale. To South Korea, Trump's demands echo 1997's financial collapse, and they won't risk a repeat. Without protections like a currency swap line, the stakes are too high. Allies, once compliant, are pushing back hard when economic sovereignty is threatened. With the APEC summit looming, one question remains. Will both sides find common ground? Or will this deal of the century unravel? What's your take? Should South Korea walk away or seek middle ground? Are Trump's tariff tactics straining global alliances? What impact would higher tariffs have on Korean automakers? Drop your thoughts below. We'd love to hear from gearheads, trade watchers, and global affairs enthusiasts. Subscribe to Highway Herald and stay informed on every twist in the road. Thanks for watching and see you next time. You can now check out any of the videos on the screen. There's more exciting and informative content waiting for you.